Is it just me, or does it feel like nothing can bring the stock market down? We get a bad jobs report, markets rally. We get a good jobs report, markets rally. We hear inflation is still hot, markets rally. We see chaos in economies and countries around the world, and of course, markets keep rallying. Year to date, we have seen the stock market grow by around 30%. And if you're wondering if this market rally is going to continue, well, banks and Wall Street institutions are saying that the markets are going to continue rallying through 2025. Now listen, I'm not a financial advisor, okay? I'm just a random guy on YouTube. Investing has risks. You are never guaranteed to make money when you invest. In fact, you will lose money at some point, so make sure you always do your own due diligence and never blindly trust a random guy on YouTube. But let's dive a little bit deeper as to what's really happening with the stock market. Now, just so we're clear, my goal isn't to predict what's going to happen in the stock market over the next 12 months because nobody knows what's going to happen. And the reality is everybody has a financial opinion. In fact, financial opinions are kind of like armpits. Everybody's got a couple and some stink more than others. Instead, my goal in this video is to help you understand what's helping the markets rally right now. That way you can be a smarter and more informed investor. So let's jump right in. But first, here are a few words from my sponsor, Masterclass. If you want to learn more about how to succeed in business or time management or negotiation, I think you'd really love Masterclass. Two people that I really enjoy learning from are Richard Branson, who is the founder of the Virgin Group, and Chris Voss, who is the former FBI hostage negotiator. And you can learn from both of them in Masterclass. Richard Branson talks about how he built his billion-dollar empire, the Virgin Group. One of his lessons that really resonated with me was the whole idea of saying screw convention, because the whole concept behind minority mindset is to think differently than the majority of people, and that's exactly what he talks about. One of the things that Chris Voss teaches that I really appreciate is how you can win back the power in a negotiation, because we're all negotiating every single day. You're negotiating with your wife or your husband, you're negotiating with your boss, or you're negotiating with your employees, and he talks about how you can win back the power in a negotiation without giving that perception that you're trying to win back the power in a negotiation. So if you're looking for more education on how you can build a business or be a better negotiator or manage your time better, you will love Masterclass, because they can help you turn your professional aspirations into accomplishments. And the best part of all is that if you use my link down in the description below, you can get started for 15% off, or you can just use this QR code right over here. So again, if you want to turn your professional aspirations into accomplishments, you will love Masterclass, and I got the link to how you can take advantage of that discount down in the description. Now, from the research that I've done, there are three main reasons contributing to the stock market boom that we're seeing. Number one is that we have no shockingly bad news. Have we gotten bad news here and there? Yes, but there's been no real shock from the bad news yet. Number two, Americans are still spending money like crazy despite inflation still being an issue, which means businesses selling stuff are still making money. And then of course, last but not least, we'll call the Trump effect, because you have a lot of people that are hoping that President-elect Trump is going to help the economy and he's going to help asset prices continue booming through 2025 and beyond. So let's go through these one by one, starting with the economic data that we're getting. Now, I am not tone deaf. If you do any survey asking the American people, how do you feel about the economy? Pretty much every single time it comes back saying that Americans are not happy about the economy. Americans are not feeling the economic boom. Americans are struggling in the job market. Americans are struggling to save money. But if we take a look at the economic data that the White House and that the Federal Reserve Bank is looking at, it always comes back saying that this is one of the strongest economies that we've ever seen. And let me actually show you with a chart why that's the case. Over the last 5 years, between 2019 to 2024, incomes in America have grown by under 20%. Now, I'm going to round it up to 20%, but the median household income in America has only grown by around 20%, while the reported inflation numbers have come in at around 23%. Now remember, I'm talking about reported inflation numbers. This isn't always the real inflation that so many people feel, because housing costs are up more than 50% over the last 5 years. Car insurance prices are up by more than 50% over the last 5 years. But the reported inflation numbers, according to the data, says that the prices of things on average have grown by 23%, which means that the cost of living has outpaced the average person's incomes, which means if you rely on your salary to survive, well, chances are the cost of living, your housing costs, your grocery costs, your travel costs, are more expensive now than they were before, and they're growing faster than your incomes. But it's not just that. Over the last 5 years, we've also seen the stock market grow by around 90%, like I showed you in the beginning of this video, which means that we have seen this divide really accelerate. The investors, the people that are financially educated, have grown their wealth significantly faster than the people that are relying on their income. In fact, the people that are relying on their incomes, the average person who's relying on their salary, has become disproportionately poorer. Because even though you're probably making more money today than you were in 2019, the more money, the more dollars you're earning today don't stretch as far as they did back in 2019. Versus the people that are investors have seen a windfall because asset prices have grown significantly faster than incomes. This is why you're starting to see some people not feel this economic boom, because companies are booming, Wall Street is booming, but incomes haven't kept up with inflation. And this brings me to the second part of the video. Americans are spending money like crazy, and they're spending money that they don't have. Now, if you've been reading market briefs, you've probably heard some of this, but credit card debt is breaking a brand new record high, and many Americans are driving cars that they definitely cannot afford. Now the question is this a good thing or is this a bad thing? Well, the answer is it depends on who you ask. Because if it's you who's driving the BMW that you can't afford, if it's you that's financing the Gucci that you can't afford, it's bad for you because now you're drowning in debt. But it's great for the economy. It's great for the stock market. To demonstrate what I mean, I'm going to give you a 30-second crash course on how our economic system works, which we should have gotten before we graduated high school. But our economy is measured through a number called GDP. GDP is a measure of all spending that happens in the economy. The economy doesn't care if you spend the money that you have in your bank or money on your credit card. So when you go into Chipotle and you buy the extra guac, Chipotle does not care if you have the $5 in your bank account, and they don't care if you're financing this through your Visa. All they care is that you swipe your credit card. Then after you swipe your credit card, it is up to you to actually pay the bill. If you can't pay it, you're the one that gets screwed. If you can pay it, then that's great. But the thing is, for the economy, as you spend more money, the economy grows, because when you swipe your card at Chipotle, Chipotle makes the money, they can continue growing, which is good for the economy, which is good for the stock market, because then the stock market sees that Chipotle is making more money. And so for the economy, you spending money in your credit card, you going into debt to spend money, it's good. Because that means the economy keeps growing, the stock market keeps booming, investors keep getting richer. But it's not so good for the consumer. And the consumer spending that we're seeing right now is what's driving this economic boom, even though many consumers cannot afford this spending. And now you might be wondering, do we risk running into a breaking point where Americans spend too much money and then they have to cut back on their spending? And yes, of course, this is what every bubble is. Every single bubble throughout history, and we've seen 16 recessions over the last century, every single bubble is Americans spend money, they spend too much money, and then they have to stop spending money because they've spent too much money, and now they have to spend their money to pay down their debt instead of spending. So now instead of going to Chipotle and spending their money at Chipotle, you're using your money to pay down your Visa debt. That's not good for Chipotle, it's good for you, but that's what hurts the economy, and that's what brings asset prices down, and that's the ultimate worry, is when is that breaking point gonna happen? And this is where the answer is, nobody knows. Which brings me to part number 3, the Trump effect. Now, I'm not here to talk politics. I could care less who you voted for in the last election. My goal is not to make friends. My goal is to help you be better with money and be better with finances. So let's just jump into it. There's no surprise that many investors and many people are hoping that Trump is going to keep the markets and keep the economy booming. Now, while most people just say this as a soundbite, let's quantify why investors and why Wall Street believe and hope that Trump is going to keep the economy booming. Reason number 1 is President-elect Trump has talked about how he wants to deregulate financial services companies, essentially meaning he wants to deregulate Wall Street. To understand what that means, let's talk about what it means to regulate a company. If I regulate a bank, I tell the bank in order for you to give somebody a mortgage, they have to meet X, Y, and Z criteria. I'm making it more difficult for the bank to issue out a loan. And if it's more difficult for a bank to issue out a loan because of my regulations, they will issue less loans and they will make less money because they make less commissions. And so if you start deregulating the banks, then that means that banks should, in theory, financial institutions should, in theory, have the ability to generate bigger revenues, to generate bigger profits. That's what people are hoping for. So people in Wall Street and investors are hoping that these deregulations will help Wall Street institutions and Wall Street in general grow, which will keep the markets booming. Is there a risk that this could create a bubble? Absolutely. But we'll see what happens. Number 2, President-elect Trump has brought on a number of people that seem to be pro-Wall Street and pro-stock market into the White House. For example, the person that Donald Trump has chosen to lead the Treasury Department of the United States is a hedge fund executive. That has investors hopeful that White House decisions will continue boosting the stock market. And of course, number 3, Trump in general just has been a general advocate for assets and the stock market. This is why you have a lot of investors hopeful that Trump is going to keep the markets booming, but nobody knows what's going to happen next year. Nobody knows what's going to happen in 2025. Nobody knows what's going to happen in 2035. Every single person has an opinion, but nobody knows. This is where I want you to be a financially savvy and a smart investor. Stop trying to make predictions, because everybody in the world has a prediction. Every bank in the world has a prediction. Every random person on the internet has a prediction, but nobody knows. And the people that are trying to make predictions are gambling. And the question is, do you want to be a gambler or do you want to be an investor? Investors make money over the long term. Gamblers can make a lot of money, but also lose a lot of money very quickly. Which game do you want to play? If you want to be an investor, then you have to know your strategy. Are you investing into the S&P 500 or into the total stock market? If you are, you don't change what you do. You just keep investing every week or every 2 weeks or every month, and you let the markets do their thing, and you just keep doing that while the markets are up and whether markets are down and whether markets are sideways. If you're more of an active investor, not a trader, that's not the game that I play. But if you're a little bit more of an involved investor, where you don't just want to invest into the S&P 500, well, now you're looking for unique investment opportunities. Can you find a good opportunity and not get caught up in the emotion? Because the mistake that so many people are making right now is they get caught up in the emotion. And there is so much emotion. Whether it's with the stock market, people believing that the markets will continue going up forever. Whether it's with real estate investors, believing the housing prices and rental prices are going to keep booming forever. Whether it's with crypto investors, who keep believing that crypto is going to go straight to the moon with no correction. And the reason why I want to highlight this is there are so many young investors entering the markets who have never seen a real correction, who have never seen a real crash. Maybe you saw a little bit of 2020, but you don't really want to call that a real recession, because during this 2020 recession, nobody really felt the pain. We had so much stimulus, so much free money going out there. The Federal Reserve Bank pumped up the markets that the markets only went down for a couple of months, and then we were breaking brand new record highs by the end of 2020 again. But the reality is markets go up and markets go down. And the financially savvy know how to make money when markets are up, but they also know how to make money when markets are down. And it's very easy to think you're a financial genius when markets are going up. But the real savvy investors can find the opportunity when markets are down. That's where the real wealth is built. And you got to understand, we know that a recession is going to happen. We know that we're going to see a correction at some point. But can you withstand that? Because there's so much euphoria out there. There's so much emotion out there. There's so many people believing the markets will only continue going up. And maybe they will continue booming through 2025. Nobody knows. But will you be able to withstand things when they go down, and will you be able to find the opportunity then? That's where the real wealth is built. Because the mistake that so many people make is, as soon as you start to see a little bit of a downturn, is that people start to panic, and that's when they start to sell, and that's when you start to lose, because that's when the smart investors are saying, this is a good time for me to come in and buy. That's why I want you to be a financially savvy investor, and this is why I've been so passionate about building Market Briefs, which is my free financial newsletter, because I see how much the traditional financial media emotionalizes what's happening in the markets, because that's what gets you to click on an article. For us, all of our financial news is inside of that one newsletter, so we don't need that emotion. We don't need the sensationalism. All the news is inside one email, so when you read it, you can just get the unbiased financial news. That's my goal with Market Briefs, is to give you a easy breakdown of what's happening in the financial markets into a simple and easy to read newsletter. You can read it. I got the link for you down in the description. But this is where you gotta understand the game. Investing is how you build wealth. If you invest your money into the markets for the long term, chances are you're gonna make money. If you become a trader and you start panicking, chances are you're gonna lose money. Nobody knows what's gonna happen next year. If you try to predict the game, you might make a lot of money, you can lose a lot of money. But we know that investors win over the long term. And this is where there are many things that can impact the markets. Markets are very risky for the next 6 to 12 months. And I'm not just saying that for the year of 2025. I mean, in general, anytime you invest your money, it is risky in the short term, but over the long term, your risk starts to go down. especially if you're investing in strong, stable assets, especially if you're investing in broad-based funds. But the more risk you take on, the more potential return that you can get. Because if you can find a good company, well, now you can see this go up very quickly. But if you don't know what you're investing in, well, then you also take on more risk. So you gotta know the game that you're playing. Stop playing somebody else's game. For some of you, it might just be investing in the S&P 500. For some of you, it might be a hybrid, investing in the S&P 500 and investing in individual companies. You gotta know the game that you're playing and stop getting caught up in the emotion. That's how you win as an investor. Let's assume that you make $5,000 a month. After taxes, you will be left around $3,833 a month. Now, when you get this $3,833 a month, you pay your rent, you pay your mortgage, you pay your groceries, you pay for some nice stuff here and there, and then you have no money to save and invest. So this is what we're gonna do differently.